If you think trading is just buying low and selling high, you're already misunderstanding the game. Most beginners start trading without even knowing what they're doing, and that's exactly why they're losing money. In this video, I'm going to explain exactly what trading is, who you're really trading against, and how money is actually made in these markets. If you understand this properly, you will avoid most beginners' mistakes. Let's break it down. Now the question is, what is trading? Well, according to this article, trading involves the buying and selling of financial assets such as stocks to earn profits based on the price fluctuating of these assets. Now, what are the main markets people trade, right? Just focus on forex, indices, and commodities such as gold, silver, copper, XYZ. You've probably heard of those terms. To show you more examples, this is the gold market, right? This is the silver market. Those are commodities. You're able to trade those as well. Then you can trade indices like the DAX, G40. This is 40 top performing businesses in Germany. Then you can trade UK 100. It's basically the top 100 companies in the UK. Same with the US or S&P 500. Don't mind the markings. It's the top 500 businesses in the market. And with NASDAQ, NAS 100. Do you get the gist? The big question is, what actually moves the markets? These people move the markets. Yes, it's him. It's actually hedge funds, institutional markets, big hitters, people or an institution that have a lot of money. If they press buy, if they press sell, they are more likely to push the markets to a certain direction. So they hold all the power. So essentially you want to trade with these big players, not against them, okay? So there's a trading floor of all these people. Those are the ones that have a lot of money and they all control where price is going. That's what everyone thinks, at least. Then of course, central banks also control the market. So banks have a huge amount of money, a huge amount of capital. If they also place buy and sell, they can also move the market, you feel me? So it's many different players that actually are able to move the market. It's not just one player. It's just identifying who is putting all that liquidity means money, into the markets, and that's where price is going to flow to. So you want to also look out for news. So there's a way to know when the banks get involved through the news. I'm going to explain in future videos how you can actually access the news, how you can know when the banks are entering the markets, so you don't get fucked, essentially. Of course, wars are also a thing that can affect the markets, or psychology and sentiment. So if there's a big thing going on in the world, that can also make the markets just go boom. From experience, the main ones to really pay attention to is the news and spotting when the big institutions are entering the markets. Those two are the main ones to look out for. Then you should be good. If you want a detailed explanation on this sort of topic, let me know in the comments. The question now is, why does price actually move up and down, down, up, sideways? Why does that happen? Think of trading like an auction, right? If the price is going higher, meaning people are willing to pay more for the current price, the price will continue to rise. But if the price drops, meaning people are selling those initial buys, essentially if nobody wants to buy higher, the price will drop and sell. The way you can spot these price corrections, you can use a strategy called fair value gap. So buyers previously were really aggressive buying up because the price was increasing and people were willing to pay more for that price. There was an imbalance left, there was a gap left. Now sellers stepped into the market and the market sold down into this imbalance. Price now rebalanced and buyers are able to step back in and buy at a lower price. That's what makes the markets move. It's understanding buyers and sellers psychology. So now price went into this area, it actually bought back up and it ended up here. Just to really simplify this, we'll get into more detail in future videos, but this is why price moves. It's just to balance out sellers and buyers, simple as. Let me tell you one thing, this is why most traders actually lose. They don't understand this thing called risk management. Now when you take a trade such as this, you have an entry and you have an exit, which is your take profit. Now if you are risking 1%, you could potentially gain 3 more percent. It's called 1 to 3, right? But some people, they risk 2 or 5% to gain 1. That doesn't make sense. Essentially, risk management is a big topic on itself. I will dive deeper into this topic in future videos. For now, just understand the basics. It's understanding how much you're risking to gain profit. Most beginners skip this process because it's a bit boring, but honestly, it's really essential. This is how you can keep losing and still be profitable and make money at the end of the day. It's crazy. If I was you, I would subscribe right now because I will be posting a lot more about breaking down every single topic. Trust me, you don't want to miss out. Trading is not gambling. gambling. It's a structured and detailed speculation of what might happen with knowing all these different steps. Without knowledge and risk control, it becomes gambling 100%. But this is it for today. Guys, subscribe if you're serious about trading and learning. This is only episode 1. Check the link in my bio. I got all my social medias, my TikTok, my Instagram, everything is there, and other goodies. Discord, everything that you need is in my description. Check it out. But guys, I'll catch you in the next one. Take care.